All right. Hey, Brendan, welcome back.
Hey, Cornell. Excited to be here. Thanks for having me again.
Yeah, it's always nice to have you guys here. I'm a huge fan and user of you guys for many, many years now. And then you've got some really neat tools that you're going to show us today as well from some other companies. So this is going to be pretty exciting,
Yeah.
something that I'm going to learn from a bit as well. But maybe for anybody first that hasn't heard of you before or hasn't heard of Passiv, can you maybe give us a little bit of intro, who you are, who is Passiv, what do you guys do? And then we can take it from there.
Yeah, sure. So, hi everyone. I'm Brendan Leung. I am one of the co-founders of Passiv, and essentially, we created Passiv to help DIY investors manage their portfolios and rebalance it in a single click. And so, we sort of like created Passiv out of our own frustration, like we were trying to manage a portfolio of ETFs, and it was a bit cumbersome having to use a lot of those spreadsheets and stuff. And so, my co-founder, who's also named Brendan, he's a bit of a whiz kid, and so he built this nifty tool that DIY investors could use to help them balance their portfolios and save a lot of time. So the goal really is to like free you from having to use your spreadsheets. So yeah, that's pretty much it.
Awesome, awesome. And yeah, we're big fans of asset allocation ETFs. I know, like I am. But what's really neat about Passiv is that you can do lots of things in it, but one of the ways I use it at least is I basically create an asset allocation ETF like my own within Passiv. And so that actually lets me use Passiv to make my investments even more tax efficient and pay even less in MERs, because the big kind of advantage of the asset allocation ETFs is that they do the auto rebalancing, right? Which is awesome that exists. But if you're really trying to push things even further, like in my case, and make things super, super tax efficient and pay the absolute lowest fees, Passiv basically lets you do that because it will automatically rebalance for you too, but it lets you pay lower taxes and lower MER. So yeah, a very, very awesome tool. And we do have free access for all the Summit users as well. So there's a link below the video if you want to check out Passiv. They have free accounts that you can go and you can explore. And then Passiv is also, we have another talk as well at the Summit where I'm with the other co-founder, the other Brendan, where we actually do a case study of my portfolio. So like I said, I've been using Passiv for years now, and that's pretty, like I used to use spreadsheets to rebalance, and now I just use Passiv. And so it's actually recording of being live, in my portfolio. And then I kind of show how I have things set up and how I automate it and optimize things. And then Brendan, who's like the other, technical co-founder, he's in there, and I'm picking his brain about optimizations that we can do even further and different ways we can automate things. It's really cool. So I encourage you guys to check out that video as well. I think you'll find it really, really helpful because it's like a real life case study. It's my actual portfolio as opposed to just like some theory or as opposed to just reading a manual about how to use a tool. So really cool stuff. And then if you're a Questrade user, I did want to point this out, then you can actually get the premium version of Passiv for free as well. Which is awesome. So like I'm a Questrade user, so I've been using Passiv for free for a long, long time now, thanks to that. So thanks for making it affordable, guys.
Yeah, well, special shout out to Questrade. And I should just add that all Canadian DIY investors get access to Passiv Elite for free if they're with Questrade. We do support a few other brokers, but those are just like read-only holdings, the ability just to read your portfolio's holdings. And so yeah, if you want the best passive experience, you gotta be a Questrade client. But yeah, if you have other accounts at other institutions, you can use Passiv to help you with your rebalancing. You just gotta like place the trades at your broker. And yeah, Cornell, like I'm really excited to hear about your in-depth case study with Wood. So I'll take that in a bit later. I guess like for the goal for my talk today really is like we sort of like created this new sort of like B2B service where we help apps like Passiv get connectivity to their end users' retail brokerage accounts. And so the apps that I'm going to be featuring today are some of our actual partners. And I thought the two ones, like we've got a ton of like good partners, but these two that I'm featuring today, I think they're more, I think the audience is going to really love it. We've got one tool that's specifically for dividend investors, and then we've got another tool that's I'd say is really it's really good for long-term investors who like understanding the markets and maybe picking a few stocks to help them like round out their portfolio. And so my goal for today's talk is to walk the audience members through both of these platforms, share what I like about it. Cornell, feel free to jump in and let me know if there are things that you like
Sure.
about it as well. And at the end of it, we're going to give out coupons to each of these platforms, so that the listeners here can try them out for themselves. So that's pretty much the agenda. Are you ready to get started?
For sure. Yeah, I'll mention two things real quick. One, you mentioned the dividend tool for dividend investors, which obviously it's really good if you're a dividend investor. But I find, and we're going to get into this, but even for myself, I wouldn't consider myself a dividend investor. I'm more of a total market index investor. But even when you invest in that way, like what I do, you still get dividends from the ETFs that you hold. And so I do find that this tool is still relevant. This dividend tool is still relevant for total market index investors, because especially when you're past that accumulation phase and now you're actually living off your portfolio, it's nice to be able to plan your cash flows and see how much dividends you're likely going to receive in the coming year. Because let's say, you're retired or semi-retired, you don't have those, let's say, 2 full-time salaries coming in anymore, right? And so it becomes this whole cash flow management game that you're playing in retirement or semi-retirement. And so obviously it's good to know, okay, I'm going to probably have X amount coming in within the next month or within the next quarter. And so how much do I have to sell of my ETFs so that I have enough for groceries, vacations, whatever the case may be. So I will say there's definitely a use case for that. Even if you're like myself, where you wouldn't really consider yourself like a dividend investor, but just by the nature of investing in the markets, you're probably going to get dividends regardless in one way or another. And so this can be a useful tool. And I did want to mention, like, you don't actually work for these companies. Like, you're not an employee of these companies. You don't own these companies. So I did want to say that, like, this is not some commercial where, you're just trying to make sales for your companies, right? These are tools that you found that you think are really beneficial to Canadian investors, and you like them to the point where you felt comfortable, putting your brand on the line and actually partnering with them because you believe they would be a good fit. And there's some synergies if you integrate some of your technology with their technology, and that ultimately the end DIY investor like myself benefits. So I did want to point that out just so people don't think like, oh, here's just some other companies he started and he's just pitching them. That's not the case. This is just tools that you really, really like to the point where you wanted to work more with them. With that said, let's get into it.
So like first up is Dividend.Watch or Dividend.Watch. And like I really like their platform because they're essentially like this all-in-one platform that really, as I said earlier, like focuses on folks that really like do dividend investing. They care about like how much money they're getting paid per year. As you said, like I'm just like you, I'm an index investor, but I do like getting paid dividends, and I really love knowing how much I'm gonna get paid. And so like as part of their tool, they've got this like really nifty portfolio tracker, and I just sort of like bypassed the account setup stage because like I just wanted to like dive right in. And so what I really like about their portfolio tracker is that it sort of like not just like tracks your portfolio, but it helps you understand exactly what sort of like annual dividend income you can expect to get from the portfolio that you have. And I think that's pretty cool because like not only am I understanding how my portfolio is doing, but I'm also like getting the returns on the assets that I hold. And so of course, aside from that, you see all of the holdings, the share value, etc. But the thing that I love the most is the annual dividend income, because I just feel good about knowing how much I'm going to get paid each year from the holdings that I have. They also tell you like the total dividends received so far. So I guess I didn't do too bad in terms of like total dividends received. But yeah, so it goes one step further beyond just like a vanity metric of senior total portfolios value. You actually like get some additional info around your dividends. Just zooming in here. So like in our instance in passive, like we tell you when dividends come in, right? But we don't sort of like tell you when you could expect to get dividends. And so like what I like about their calendar feature is for any given month, you could see which stocks or ETFs are going to pay out your dividends and exactly like how much you've gotten. So in this case, I hold a bit of VU, that's a US ETF, and basically I got $39 a couple of days ago, well, just last week. And so like I like that. Of course, if you're a paid user of theirs, you can like tab through to other months to see if you're gonna get paid. I guess I'm not getting paid this next month. So like I like that because like you can actually like see when you get paid and just like sort of like see what sort of like expected dividends you can get, as well as what it's paid out. And like for some reason, I guess I'm just not getting paid dividends for the next couple months, but I guess Apple is gonna pay me some in January, so not too bad. Um,
And I
the other thing
remember
they,
when you and I were
yeah,
talking about this offline before, I remember asking you, what is the difference between what passive reporting tools provide
mhm,
when it comes to dividends versus what these guys provide? Because what I the way I currently use passive is there's reporting tools in your software where you will see which ETFs paid me how much in dividends and when those dividends were received. And so I would traditionally, once we hit our semi-retirement sort of stage, I basically would use those to plan my cash flows, because I will know, okay, typically if I look at the past year, I notice that I get dividends issued on this and this and this month, and they tend to be this and this amount. And so I would use that previous year as a forecast for when I'm going to receive dividends in the coming year and how much. And I remember asking, well, what does, that's really useful to me in passive. So what do these guys do that passive doesn't provide? And I remember you telling me that one of the big differences is that this one is more forward looking, whereas in passive, it looks in the past. Okay, what have you received? How much when? And then you can make predictions based on that. But with this tool, I remember you mentioning that it actually looks forward. And if there is and correct me if I'm wrong here, but I believe
mhm,
it's if, let's say, there is some anticipated dividend growth that's going to take place in terms of a larger dividend payout, because let's say the company's doing really well, or market conditions change, this will actually predict, or try to predict it to the best of its abilities, how much dividends you're going to receive, factoring in a bunch of different variables. So it can give
yeah,
you a bit more accurate of obviously no prediction is ever 100% accurate, but it gives you a more accurate prediction than just looking at last year and saying, okay, I'm assuming it's going to be roughly around this amount, which is like what I've been doing today. Is that accurate for me to say?
yeah. So like you can use your dividend calculator to like sort of like calculate what you can expect. I was going to get into it a bit later on,
Oh, sorry.
but it's
I got
all good,
overly
man.
excited.
It's all good. But like to your point though, they're a lot more robust than passive. So for example, like they basically, so like under their diversification tab, not only do they like help you understand how your portfolio is diversified in terms of sector, you can see like how this particular portfolio is diversified in terms of yield. As you can see here, only like 19% of my portfolio has like high dividend yield, whereas like the rest are in like low to medium yield sort of categories. But they also like factor in low yield and growth. And so like basically the way I look at it, it's like getting more of a lens or an understanding in terms of how am I diversified from a dividend perspective. And so, in this case, like I'm an index investor. I don't particularly care. But it is sort of like good to say, oh, okay, well, like some of the stocks I have do help me I guess help make up my returns, right? Because like dividends is to me a return of capital, and so like it's part of your returns. And so like let's say if I use their diversification sort of tool, I could get a quick understanding of like how my portfolio is constructed from a dividend perspective. And so like in this case, we'll see that I've got like I guess like 3% of my portfolio and like really 40% of my portfolio in low yield, low growth stocks. And maybe if I was interested in like adding more or sort of like tilting my portfolio to hold more dividend type paying portfolio stocks, then I can like use a screener and basically find stocks that have like a high dividend yield or high dividend growth. And so like that's not something passive does, and it's something I really like about their tool. So like not only do they just like show you the regular fundamental metrics when you're looking for stocks, they also give you like an indication or a score of like how likely it is this company that you're evaluating is going to be continuing paying dividends. So like I guess in this case, let's pick on I don't know, Aflac. They seem to like have a really good dividend score. And so what they do is they sort of like show you like the score. So in this case, it's like 8.6. It's relatively good. They actually like show you like what metrics they use to calculate this score. You can break it out and learn a bit more about the metric. And so they sort of like they use a proprietary way to like interpret all of this data and give you that score. But you could also like compare it to the sector averages that that particular stock is in. And so I sort of like use the diversification tool, like specifically like when I'm looking for a few, I don't know, like stock picks to add to my portfolio. I sort of like if I'm looking for dividends, I can use their tool to one figure out like how diversified I am from an a dividend perspective, then use their screener to actually like find stocks that have like good scores that that means like like they're going to stick around, and then do a bit of analysis on it. And then if I wanted to get a bit more sort of like savvy, I can like sort of like plug all of these stocks into their calculator and do a bit more planning. And so that's sort of what I really like about their tool. It's made up of a lot of cool features all together in one. And yeah, if I click on calculate here, I could see like overall what the weighted average would look like, how much like annual dividend income I'll get. In this case, I didn't actually like add the stock I was looking at, but it just, as you said, like it helps with the planning purposes. And that's sort of what I really like about this tool, is that it's got many little things that make it very useful. And yeah, I think it's a great sort of like tool for anyone that's like focused on dividends or just wants to better understand how their portfolio is constructed from a dividend perspective. So yeah, that's what I like about these guys. They do have this coupon, and so maybe I'll show you really quickly how you can enable the coupon. These guys are using like a code. So in this case, like you'd click on subscribe, and I guess like you can click on the apply a discount code, and then you enter passive 40, and you get 40% off an annual subscription. And so yeah, that's one of the tools I really love. And I'll get into the other one, but maybe I'll just stop here for a second in case you had any other questions.
Sure. So would it be fair to say that this tool here is more of a forecasting, predicting tool and a research tool, whereas passive is more of a portfolio management, portfolio execution, where you're actually executing the trades, you're getting rebalancing, and a portfolio reporting tool where you want to see reports on your portfolio, what has already happened. So that would that be fair to say that those are kind of the two way that the passive is different than these guys?
Yeah, I would say like from a rebalancing standpoint, like that's sort of where we shine. Like in your case, right, Cornell, you've got like a really complex portfolio, as you mentioned earlier on, and so like, could you imagine having to rebalance across 3 accounts? It's a bit painful. What if you're running a complicated portfolio strategy? That's sort of like our jam. And like full disclosure, like we've actually like partnered with Dividend.Watch to implement a feature within Passive that allows users to calculate their dividend return. So within the Passive app, you can link out to their calculator and actually like calculate how much you can expect to get in dividends from the stocks that you have. And so like we're trying to not we're very conscientious of like it's difficult to be all things to all people. And so yeah, these guys really shine from like that sort of dividend income planning perspective. So yeah, I mean, like if you're a hardcore dividend investor, you probably have like complex spreadsheets on payout expected dividends, payout dates, that sort of stuff. But like even with your own spreadsheet, you don't know unless you're like doing a lot of analysis on them. You don't know if they're going to continue paying dividends out in the future, which is also like a very hard sort of like problem to solve. And so I think they do a really good job simplistically at like helping, I guess, like non-financially savvy DIY investors who are focused on dividend investing. So I think they've done a really good job there.
Awesome. Yeah, it's pretty relevant, I think, especially now during we're having this market crash. We're in negative for the year for the last 52 weeks. And sometimes when we do have recessionary type things or crashes, dividends do get cut, right? Or they get reduced or eliminated altogether, depending on the company. And I can see this tool being useful in that scenario as well, because again, if you're trying to plan out your cash flows, because you're actually living off you're actually living off your portfolio. You're not just reinvesting the dividends when they get issued. You're actually taking them out of your account to buy groceries or whatever it is. Then this tool can be used, it looks like, to at least help forecast or predict a little bit, well, how much am I really going to be getting? Because this tool actually does forecast. It does look at the current economic climate, it looks like. And so it will say, okay, it's been a bad year, maybe expect this much less in dividends this year. And then you can plan accordingly, right? As opposed to you just kind of like, I don't know, here's what I got last year, but if last year we were up 20% and this year we're down, 10 to 15%, then okay, how much are my dividends going to get cut? No one knows exactly. Or are they going to get cut at all? So it's nice to sort of have this unbiased source of a second opinion saying, look, I know you got used to having this much in dividends every year, but things are a bit rough right now. Maybe anticipate to get X% less. And then, it's better to have that data point, right? As opposed to just kind of, how much is it going to, you're getting anxiety. Like, how much is it going to go down by? I don't know. And I have no clue how to calculate that. This way, you've got someone telling you this. Very cool. Can you do the screen share one more time? I noticed one thing that I think is really valuable, to me, and I think other investors as well, that I never noticed before, but I think it's something that's pretty rare that I just noticed these guys provide, which is quite interesting.
Yeah, sure. Let me share this again.
Yeah. So can you go back to one of the first pages you showed where it showed kind of the stats at the very top for your portfolio? I think it was
Yeah, sure. I'll just pick on this one. Yeah.
Yeah. So total return box. That's actually pretty rare to have that metric, to have that in a tool, because usually for anybody that has been in this at all, when you go to like a Yahoo Finance or just, there's so many, right? Or even just search a ticker in Google, whatever the case may be. Typically what they'll do is they'll show you, okay, what has been the price growth or the price decline over a certain period. And usually, you select the period to what's it been today, past month, past year, past 5 years, etc. But those typically do not include dividend payouts. That's just the change in the price. And so as an investor, what you really care about is what's my total return. So my capital gains or losses, plus dividends. I mean, that's your true return, right? You don't really care only about the price, right? Because maybe the price is flat, but maybe it paid out a really nice dividend, and so you're actually a positive where a lot of other things are negative, right? So that is an important number. And to date, the tool that I have been using personally, because it has that total return number, actually calculates it for you for different tickers, has been Morningstar. And so it's really cool to see another tool that actually does this, because in Morningstar, I'll just pull up the ticker and I can look at it that way. But this, I would say, is even better because you can actually put, it's easy to import your portfolio in here and it'll actually show it to you for your portfolio. Maybe Morningstar has some like paid version where it does that too. I'm not sure. I've just been using the free one, but it's really neat how in here it's integrated with passive, it's integrated with your portfolio, and you get that total return number as opposed to just how much is dividends, how much is the price changes. So yeah, I just want to point that out because that's got to give these guys credit where credit is due, because it's very rare. I've noticed because I've looked at so many of these tools by now. And at this point, I just assume like you can almost assume it's just going to be looking at price growth and declines, not total return. So whenever I do see a total return number, I'm like, oh, these guys are good. They know they know what they're doing.
Yeah. I mean, they're definitely another like sort of like thing I came across, and like I don't really like use it because I invest mostly in registered accounts, but like you can actually like set up your after tax percentages for the dividend paid. So like I think that's good if you're investing in a margin and you want to like, I guess, like take away the the amount you pay to your the
Hmm.
tax man or woman.
Again, to
Like
get a more accurate forecast.
yeah,
Yeah,
yeah. So it's definitely something that I think they do well, and yeah, I give them credit where credit is due as well. And
for sure.
it a lot of their free features I think are valuable. So like even if you're just like curious from that point of view, like you could just try it out for free. And it still gives, in my opinion, a lot of value there. So yeah.
Yeah, that tax thing is useful for sure. Yeah, because I mean, for anybody not familiar, in a taxable account, if you are investing in foreign companies, so like US or international, somewhere outside of Canada, that just gets, those dividends get added as just regular income. So if even if you are in the lowest tax bracket and you're past that basic personal amount, that's basically like roughly 20%. Can vary depending on a few things, but generally 20% is kind of the number. So that's a significant enough of a percentage that you want
Mhm.
to factor in when, again, you're budgeting and you're planning what to spend, and that kind of a thing. So very interesting.
Yeah, for sure. And yeah, I think I think you hit the nail on the head. It's like they've definitely done a good job. And earlier on, you meant, well, not earlier on, but a while back, you mentioned like right now we're in a downturn, and like I think the next tool that I'm going to share with you is this one. I think maybe a bit more helpful for like folks that are index investors, because it helps you to better understand the markets, and of course like also like better understand specific sectors and the fundamentals of other stocks. And so like this next tool that I'm going to share with you, I would say maybe a bit more up your alley in terms of like if you like to, I guess, like nerd out on the markets and how they function and what sort of like drives them, or just like get some insights into like why the market is performing the way it is. And so I'm gonna share my screen again, and this tool is called Simply Wall Street. I'm not sure if you've ever heard of them. They've been around for quite some time. They've got a really powerful like analytics tool, but this tool, I think it's really suited for long-term investors who are looking to better understand the markets, discover stocks to add to their portfolio, or better understand the stocks that they currently hold. And so I've logged into my Simply Wall Street account. So again, I bypass the entire account setup. And the free version of their tool, I think, is like very useful. And so upon logging in, you see the portfolios you have, like a quick snapshot of the markets, how they're doing, any upcoming events related to the stocks that you hold or recently viewed. And then they give you like these sort of, again, like updates on your holdings right here in this central area of the page. And I mean, like I don't look at this much, like top gainers, losers, industries. I'm more like focus my understanding of like, like what's going on with the stocks that I have. And so what I like about Simply Wall Street is that I could, let's pick on Canada for example. Like I could pick a market or sectors and like get an understanding of how the markets are performing. And so in this case, they're giving you a bit of a write-up on how the Canadian markets are doing, how it's performing. They also give you like the valuation and performance of the markets, which like I like from an investor's point of view, I like to understand how the various markets or industries are performing and working. And so I use this chart to understand just that. And so like in this case, over the past 3 years, I'll just like explain to you like how I interpret this chart. Over the past 3 years, we've seen like how the markets have been doing in terms of like their rolling PE ratios. And so what you see in the red and the green is that like the red sort of like indicates, when the markets have been historically overvalued and basically relative to the average. And in the green, you sort of see right now, I guess the markets are a bit undervalued. So, if you're an index investor, like don't worry about it. At least like you can understand, like how things are going for the past 3 years. Just below it, they also like help you to understand essentially like how the markets are performing relative to like the total market cap and revenue, and as well as earnings. And so usually you want to see like a chart that's like semi like correlated. But yeah, like from my point of view, it's very, very, very interesting as well. And so like I guess like the blue line, it represents, like I said, the revenue. The teal represents the revenue of the underlying companies in the index. And yeah, you're just using this chart sort of like to understand if the markets are moving in tandem or if they're diverging from one another. And as well, they give you a bit of commentary on like the current market PE, past earnings and growths. They also give you like sector trends. So like in this case, the Canadian market, maybe we won't look at the past 7 days. Maybe we look at like the past 3 years. Actually, let's look at what's going on in COVID. So as you can see, like in the Canadian markets, what's been driving the sectors has been consumer staples and energy. I was a bit shocked to see that healthcare wasn't being driven, wasn't like driving the overall market. And that's like from a returns perspective. What about from a valuation perspective? And so again, you can not just see like the price to earnings, but also like the forecasted growth in each of these industries. So, like from my point of view, like very, very interesting. And yeah, I think it's certainly helpful, especially like getting some of these write-ups. I'm just going to stop here, Cornell, in case you had any questions or thoughts.
Yeah, it's very interesting. This screen we're looking at right here, I can see this being helpful for some investors that like to tilt their portfolio a particular way. So for example, Canada is known as not having the most diverse in terms of not being the most sort of diverse in terms of industries, right? We have a very heavy concentration in just a few select industries, unlike the US, which is more balanced, by industries. And so what some people just do total market index investing and that's it. Others do like to put a little bit more in particular industries, specifically, especially in Canada, just so that we have, it's a little bit more nicely weighted among the industries as opposed to being overrepresented in certain ones. And so I can see this being useful for those types of investors, because if you are going to be tilting your portfolio a certain way, by sector, here you can see whether some of them maybe they're overvalued a bit. Look at the forecast. I can see this being a useful chart for sure. And then if you go up, Brendan, if you don't mind, to the two charts that you showed in the beginning, I can see this being a good anxiety reducer. Even, and again, I'm coming at this from an angle of an index just total market index investor, not someone that tries to time the market or anything like that. But I mean, I get emails all the time, people saying, "Oh, the markets are down, the sky is falling," that whole thing, and they get worried, they get anxiety from it. And so things like this, I think, can help maybe alleviate that a bit. Like, for example, in this case, okay, maybe you're nervous about the markets, maybe you're sitting on a whole bunch of cash because you're scared to invest it, because you're seeing the headlines in the news and they're scary. But then you look at something like this and it's like, okay, the price to earnings is relatively low compared to what it was before. So if you felt when things were great and rosy, that's when we were in the red area, right?
Yeah.
And you were willing to invest then when the value, when the P&E was really high. And now we've already endured these drops quite a bit. We're already at a pretty reasonable price to earnings ratio now. So why wouldn't you feel comfortable about investing that cash now? You know what I mean? And so I can see this kind of, you're able to see the story a little bit by looking at charts like this and not panic sell, which for an index investor, that's sort of the ultimate, one of the ultimate key success factors, right? Is can you actually hold on to your investments when the markets go through their inevitable fluctuations, right? And so this can help. And then the chart below I thought was really interesting too, especially now just looking at, and again, I'm not, I'm oversimplifying things a bit here. Obviously, you have to look at more than just these things. I'm not saying look at these two charts and you're able to predict the economy or the markets, but I'm not saying that at all. But I mean, it is interesting sort of data points, right? Especially if you are getting nervous when you hear about what's happening on the news, when you listen to the headlines on the news. Like in this case, the total earnings here look to be growing. However, and then the total revenue is growing as well. So I'm looking at that green and the blue line, but then we see total market caps going down. So that's an interesting story, right? And again, I'm probably, I'm not a economist, stock predictor person at all, but just thinking of it logically, that's an interesting thing to look at, right? Because, okay, earnings are growing, revenue's growing, but total market cap's going down. So is it possible that maybe investors are just being fearful? Again, all these news headlines, COVID, Ukraine, all these really negative things that are happening, and people are just kind of getting scared. They're some just want to get out of the markets. That lowers the total, people are selling off. So we see things drop, but how are the actual underlying companies doing? Oh, well, as a whole, according to this, at least, it seems like they're not doing that bad, right? So I can see when you look at it that way, that can maybe help alleviate a little bit of stress because when you look at the news, it seems like a lot of times all you hear is, oh, things are bad, another global recession coming, it's just panic, sell. And here it's like, well, hold on, are you sure you want to do that? And then I guess on the contrary, or on the flip side, if you see that market cap just keeps going up and up and up and up, but you're seeing that earnings are actually dropping, revenues dropping, then that's kind of, okay, then, I mean, in those cases, the news is usually like, oh, wow, things are going so great. And, everyone's talking about, oh, everyone should be investing and things are nice and rosy. But then when we're about to hit a peak, I would imagine that's what we tend to see is we see market caps are going up and up and up, but earnings and revenue maybe aren't going up as fast. And so that train, that can go on forever, right? There has to be a little bit of a balance there. And so again, I can see that kind of can help you sort of deal with these emotions and hopefully, prevent you from being too greedy and also prevent you from being too fearful when it comes to investing. So I don't know, that's my sort of just thinking of it logically. That's kind of how I would look at that.
Yeah, it's funny you say it. So like, as like an index investor, like the fact that anyone's like following index investing, you obviously have to believe that the markets are going to keep going up. And so like, I sort of like ignore I ignore like talks about the market's going to crash generally. I'm more like use this tool just like out of curiosity, and like in this case, as you said, to just reinforce some of the decisions that I've made. But like anytime the markets are red, like I don't care. I keep buying anyway. And then when the markets are down, I'm like, okay, I just gotta stick to my plan and keep buying and maybe understand why they're down. And so yeah, it's just, from my point of view, like it's good sort of like unbiased commentary on the markets using like like data, and these guys I think do a really good job at like simplifying these large data sets and giving you some insights, and they actually like tell you here, good things about the current PE, bad things, like it's very unbiased. The other thing is they give you news about like some of the stocks that make up the markets that you're in, and so yeah, I think overall I use this page a lot, but what I really like about Simply Wall Street is that like it helps me find like stocks that like not really like find stocks that I'm looking for. Actually it does, but like more so like also to understand the stocks that I have in my portfolio already or watching. So like before I dive in it, like they do curate content that you can, like if you're looking for certain themes, they will like have articles. So if you're interested in like the future of work and finding companies that you think are going to dominate this space, they curate those companies for you, and they give you like insights and commentary based on fundamental analysis in terms of how they're going to do. And if you want, you can add them to your watch list. In this case, like I was very curious about Canadian natural resources. And so, I was like, should I buy it? Is it overvalued? I love the reports that they give. And so as part of like a free account holder, you actually like get 5 free companies per month. I don't buy a lot of stocks, so each month I just like, like log in and check it out and see, like what they're saying about either like the companies that I own or maybe companies I'm thinking about buying. And again, they give you this nice write up with a sort of like a spider web, sort of like quick glance summary of how the stock is, like their analysis. Sorry, I said spider web. It's actually like snowflake analysis. And so like you see their dividend, how they're doing from a dividend perspective. So this stock, it seems to be doing pretty okay, but you can drill down on better understand their valuation. So they, again, just like the previous platform, they give you like a valuation score, and so they give you the criterias that they're scoring the company in. They give you an understanding of the future growth. So I guess in this case, not much future growth for CNR, at least according to the data that's
the sea of
here.
red.
Yeah. But yeah, like, so I sort of like use their tool as a way to just like better understand companies that I'm holding, seeing if things have changed, but also for evaluating companies that I'm considering buying. And yeah, very, very powerful tool. They do have a portfolio feature where you can track your portfolio. So it's still like being developed. It's a relatively new feature. And so yeah, I guess Exxon is doing well compared to the market's not doing so well. There is a screener similar to the last platform, Dividend.Watch, that I showed you. And so, if there's certain stocks you're searching for, you can use their screener tool to find them. But all in all, I think it's like a really well-made platform. It's been around for a very long time. I think it like over 2 million, maybe 3 million people use this platform. And so it's not as new as the Dividend.Watch guys, but still, I think very helpful. And I really do like their platform, I must say. And that's pretty much it in terms of the tools. For these guys, there is like a link that I'll share so that listeners can sign up and get 20% off their plans. So yeah, if anyone would like to, I'd say sign up, try the free version. And if you decide that you want to like go forward with the paid, maybe create a second account and use the coupon, or create an account with the coupon and use it, because it's not a bad platform at all.
Yeah, very, very interesting, very nicely summarized as well. And I like how you can drill down and look kind of some things at a high level, summarized graphically. It looks really nice just to be able to digest the information quickly, but then the ability to be able to drill down and look into specific things that are of interest, I thought was really neat. Yeah, no, so that's great. Yeah, like that healthcare example. I remember when you and I were offline earlier, or when we were chatting earlier, it's like, oh, healthcare's down, and you can actually drill down into healthcare and see, well, which stocks are driving that decline. And I remember when you and I were looking that up, it was a lot of the, I think it was some of the pot stocks, right? Like those have not been doing well.
You want to take a look at it?
Yeah. So yeah, really neat functionality. And even when you show that summary page and they had the different bullets, how you could click on in the summary stuff part, you could click on any one of them, right? And it would open up more information. So yeah, very, very interesting.
So I think we were looking at like the past year.
Yeah, there we go.
And so this would have been like maybe at the height of COVID. Maybe let's do 3 years. So like this would capture before, during, and maybe after COVID. And yeah, when you looked at it, right, like we were like, who were the top stock gainers and losers? And a lot of these were like, well, I guess they had more. That's like some pot stocks.
Yeah, like I saw Canopy Growth there, right? That's a giant decline,
yeah.
And that's marijuana with a ticker like weed. You have a little hint as to what they're selling.
Oh, geez, it's not. I
wonder what they're selling. Is it not gummy bears, or maybe?
Yeah, no.
Or maybe the weed infused gummy bears. I don't know, but
you seem to know a lot about these things, Cornell. Geez, you can't educate the audience. But no, yeah, I do. Yeah, I think it was like really helpful to better understand, like you said, like what what sectors are driving the indexes that you're investing in. So yeah, I really, really think that overall, like both of these platforms are good, to each their own. If you're dividend investing, dividend focused investor, Dividend.Watch is for you. If you're a stock picker, Simply Wall Street is for you. If you're an index investor, maybe you do a bit of stock picks, I would still use Simply Wall Street because they give you a lot of good analysis, as well as if you're an index investor and I guess you want to use a platform to reinforce some of the decisions that you've made, I would use it. Likewise, maybe just understand what's driving the particular markets that you're investing in, just better understanding it in a more unbiased way. And so all in all, I think these are two great platforms for the listeners. And if you don't mind, I'll share the link with you so that the folks that have listened to us today can sign up to Simply Wall Street and get 20% off their subscriptions. And same for Dividend.Watch. I'll share the promo code that the audience can sign up and get their 40% off.
Sounds good. I'll include all those underneath this video, and then I'll include the link to Passiv as well.
Yeah,
anybody
sure.
that wants the free account that way as well. So we'll have at least, or we'll have 2 links, I guess, and 1 promo code as well below. So yeah, that sounds great.
Yeah. And I'd just like to say thank you so much for having me here today. Keep doing such an amazing conference. Like I trust that many Canadians are benefiting from what you and the team over there are doing, and looking forward to next year's conference.
Awesome. Thanks so much. Yeah, we just hit, I think it's 22,000 Canadians right now. So things are definitely growing. Lots of people attending, and so thanks for the positive feedback, and yeah, great to have you back, and thanks for sharing. I'm a big geek for all these kind of tools and different things, and to get insights. So it's always fun for me to see these tools and then see them in action, and then see how they can be applied in the different use cases like we went over today. It's always fun, especially when they are helpful for us Canadians, because so often we see different tools and different resources and we get all excited, or at least this has happened to me, where I get all excited about it, and then I try to open an account and it's like, oh, sorry, you're in Canada, you can't have access. So it's nice when there's tools like yours, like these guys, where whether as a Canadian you're able to take advantage of the really great things they've built. So always fun, and I'm always happy to share useful tools like that. Awesome.
Well, thanks so much, and thank you so much to the audience for joining us today.
Yeah, thanks so much, and we'll see you next time.
Cheers.
All right, take care. Bye.
Bye-bye.